Hi, this is Sam here with the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday the 31st of March, the Easter edition. Starting with the FTSE 100, which seems to be well poised at the highest levels. Looks like a mid-move consolidation ahead of a move to the upside. The top of that rising December trend channel, 81.30, and we're looking for that hopefully by the end of April. On the downside, below recent support around 78.90 risks a test of 77.90, which was basically the old March resistance. Worst case at this stage, the floor of the channel there from December and the 50-day line around 7,700, but hopefully we are beyond all that testing. Moving on to the DAX, and here the situation of a market just on a runaway move, very, very impressive. We were looking for the top of that rising October trend channel by the end of next month at 18,700. Obviously, we narrowly missed getting there by the end of this month, but 18,700, the level we're looking for by the end of April at this stage, just because we've come up so far and so fast. I suppose if that channel is a bit higher than I've drawn, a bit steeper than I've drawn, then 19,000 would be a fair target for the end of that next month. On the downside, not expecting anything lower now than 18,000, which is basically the old target for this market. Moving through to the Dow, and here we bounced above the floor of the rising October trend channel. We also bounced at and above old resistance, which was around 39,300. The longer we stay above that, the greater the chance of an initial target here, 40,500 by the middle of the month, and then best case by the end of the end of April, rather, 41,300 at the top of that rising September-October trend channel. But amazing performance here, obviously by the DAX and the Dow, and FTSE a long way behind. Moving on to Bitcoin, and here we had that boost, the London boost you could call it, during the week, and nice flag here resting at the at and above the old record from 2017. Let's call it 68,000, and above that we're looking for the top of that rising trend channel from back in January as high as 81,000 by the end of April. Worst case at the moment down to the 50-day line on the floor of that January channel around 62,000, but hopefully we will not see anything lower than 68,000 in the near term. Moving on to gold, which has been trying to catch up with the Bitcoin situation. I suppose we're only, what, 70,000 or so dollars behind, but you never know. Here we've managed to find support at the top of that March trend channel from last year, 2,200. Above that, looking for 2,270 by the end of this month. Some conservative target there, given how slow gold can be, but that resistance line projection from July looks like a good place for this market over the near term. Worst at the moment would be 2150, which was the old December peak and March support. Moving on to the stocks, and happy to be able to look at Amigo. I suppose there was a chance of not being around anymore, but the arrival of the troubleshooter, as I call him, very impressive, and that's been impressive for the share price. We've got a gap through a rising 50-day line. Neckline resistance there at 0.25, above 0.25, looking for 0.5 by the end of April. Obviously, that doesn't include all the possibilities of dilution, suspension, or general disasters that could hit the situation in the meantime, but at least the technicals look pretty good. On to Argo blockchain, and here it looks as though the shares responding to the Bitcoin situation, finally breaking that line of resistance, or a line of resistance there from back at the beginning of the year, and breaking above the 50-day line at 12.25. At least while we're above the 50-day line, we can look gingerly towards 15.8 pence or 15.9 pence, which is the 50-day moving average area at the start of a turnaround. Obviously, you can see that shares haven't been above neutral 50 since the end of February, so a lot of work to do still to get them back, reflecting the underlying position of the Bitcoin situation. Moving on to Chill Brands, where there was a nice bounce at the end of the week. I presume the market's waiting for a tsunami, the announcement of a tsunami of sales from the company, given how long we've been waiting for that. Resistance line there from the end of January, that was broken at 2 pence above that, looking for 3.5 pence, which would partially fill that gap down that we had back in January, and hit the top of that broadening triangle from the end of January. Let's hope that 3.5 pence is on the way while we're above 2 pence on chill. On to Genincode, which was recommended by me, by a very ardent viewer of the Bulletin Board Heroes. Here we've got hopefully a V-shaped bull flag mid-move consolidation. Initial target here was at 8.1 pence, and we're already looking for up to 12 pence by the end of next month, while we remain above recent support at 5 3/4. So above 5 3/4, looking for 12, especially given the way that the 50-day line is now rising well on that situation. Incanthera, number 3 riser, I think, as far as Q1 is concerned in 2024, which is quite impressive. I won't tell you what the number 1s and number 2 are on Aquis, but maybe you can have a look and find out. Current situation here is that we've got one of our favorite setups, which is a gap through a rising 50-day moving average, finding support above the old January resistance there at 13 1/4. The longer we stay above that, initial target here 20 pence, let's say, which is the top of that rising January trend channel. Best case scenario would be up to as high as 30 pence by the end of next month, which is possible if we don't have any dipped below that old January peak. But one of the best or better charting configurations around, and even more good given that it's on the Aquis market. On to Kavango, which is also looking better than expected. Here we managed to rally back towards the old support area, which was basically pre-July support for the shares, 0.94. Above 0.94, looking for the shares to hit the top of that rising trend channel base from back in April last year, as high as 1.4 pence by the end of next month. So looking pretty good there. In fact, very good given the clean break of the 200-day line and also the rising 50-day moving average, which was broken in one go. But the key here, breaking above 0.94 for Kavango. The stock that nobody else looks at, I think, apart from the management of the company, presumably, is Mineral Financial Investments. And here we've had a gap higher through the 50-day moving average, which is also already rising. In fact, it's a bear trap gap reversal. The initial target here up to 14 pence at the top of that September rising trend channel base. Second target, which could be hit as soon as the end of next month, is 20 pence on the top of that rising trend channel from June. I think from memory the NAV is somewhere around that 20 pence area, but certainly much higher than 12 pence at the moment. Moving along to one of the winners of the week, which is Orosur, and Brad George doing well. Here you can see that we've had this V-shaped bull flag breakout above the 50 and 200-day moving averages. That suggests that our initial target here, around 4.8 pence, will be achieved very easily, and we should look towards 7.3 pence by the end of next month. I think there's progress for the company at a flagship project, the name of which escapes me at the moment, but doing well anyway. Moving on to a stock which I haven't looked at for quite a long time, which is RBG Holdings. Here we've had a long-awaited trendline break from last July. That's around the 9.1 pence level, and above that, looking for the shares to fill the gap up to 16 pence, ideally by the end of next month. If you are cautious, I suppose you could wait for an end of the day close above the bottom of the gap from December, but that would give away a lot of the upside. The 50-day line starting, in fact, already rising, so that should be enough of a signal on a weekly close basis for RBG. On to SolGold, which is one of the shares which is enjoying the rally in gold at the moment. Here we've got an initial target there around 12.5 pence, hopefully over the next couple of weeks. And the next level up would be the upper parallel of that, which is heading towards 19 pence. And we're looking for that by the end of next month, or perhaps going into May, but certainly that kind of 4 to 6 week time frame. Ideally, we stay on the right side of recent resistance at 9 pence, and I suppose the stop loss there, the rising 50-day line at 7.5 pence. The stock which I swear I was going to look at on Thursday, but chickened out of, which was a mistake, was S4. And here the reason for looking at it was the very strong hammer candle that we had on Wednesday, and the way that the shares were closing, or actually already above the top of the gap there at 44 pence. View now is that above 44 pence, we're looking for 65 pence during the course of April, or hopefully even the course of the first half of April. Hopefully the pain and misery that the shares have had for most of their lifetime will soon be over. If there is a stop loss area, it's probably going to be the old January resistance on the way down around 48 pence or 49 pence if you are watching the shares closely. Moving on to the stock which is a bear favorite in terms of trying to get the shares down, but actually looks as though the shares of Tern ready for one of their intermediate rallies. We managed to close within that last gap down that we had in January, looking for the 200-day moving average at 3.9 pence. Even if the shares wilt after that, you can see that on most of the recent rallies, the 200-day line has been the target and the resistance at the same time. So above the 50-day line at 2 pence, looking for up to 3.9 or so sometime during the course of April. On to the last two. The first one of the sizzlers from the end of last year. We had that very interesting potential takeover of the company or offer for the company back in October, but the shares of Upland have regrouped after that. They didn't go back down to 1p or 0 as some bright bears were trying to look for. We got a nice close near the 50-day line back on Thursday and looking for 5 pence over the course of April, which is the top of a rising trend channel from back in August. Finishing off with another bear target, which is doing well at the moment, which is Westminster Group. Always good when that happens. Here we've got a situation where the shares were in a broadening triangle base from basically February last year, looking for an initial target here up to 2.1 pence, and that's valid while we hold above the recent January resistance of 1.7, so quite a tight stop loss there. I suppose you could risk down to 1.5 if you're keen. If we break back above the 2.1 pence level, then we're looking for the resistance line, which I'm going to try and draw now from back in the autumn of 2022, which would be up towards the 2.5 to 3 pence area. Let's have a look at it now. So let's say about 2.75 pence by the end of next month as a best case scenario target, while we're above the 1.6, 1.7 pence area. That's it for me today. More updates during the week.